Welcome back. You're tuned into Chartbusters. Well, let's take a break from the equity markets. Let's focus on the commodity markets. Manisha joins us to help us out with the commodity space. Manisha, take it away.
Well, thank you for that. I'm talking about copper right now because while we're looking at prices coming off their one-month highs, but for the month of May, it still is a very positive closing. So if you look at the LME markets, we are up by 5% for the month of May. And for this year, until time, copper has gained up by nearly 16%. It clearly is the best performing commodity within the base metal sector. And there are various reasons for the reason that the prices have continued to gain up there. But starting with the reasons that you have seen prices decline first. Well, first, it is about the risk of slower demand, the kind of data that we have seen from US, all of that has been on the weaker side. So whether it has been about jobless claims, which has seen an increase more than what the street was anticipating, and the continuing jobless claims are at almost multi-year highs there. The second thing that we were reacting to is the US GDP numbers. Well, it has seen a contraction for the first time in 3 years. Here as well, the street was anticipating. So the slowdown is something that seems to be hampering the price moves here. Having said that, other factors and fundamentals are quite supportive for copper prices there. The LME futures are trading in a backwardation that tells you that there is a tight supply in the near term rather than in the longer term. So tight supplies and immediate demand coming in has been supportive. Also, there have been reports of flood in mines in Congo, and that clearly comes in as a threat to global supply in case of copper there. The LME stocks have been on a constant decline as well. When you look at the numbers from mid-Feb, it has been a very sharp decline. The LME stocks right now are trading at a one-year low. It has declined by 43% since mid-Feb and just about stands at 144,000 tons there. The street is also reacting to the IEA data, which tells you that going forward, the demand for copper is going to be quite strong. The spread between LME 3-month and cash also stands at $40 right now. And the IEA statement suggesting that the global demand will outstrip supply by 30% by 2035 tells you that a longer-term scenario for copper prices continues to be quite stronger there, especially when it comes to clean energy technologies, the AI data centers, and with the way we're moving on to EVs and renewables has been supportive as well. The final chart should tell you on what the outlook forecasts are when it comes to copper there. So we have BNP Paribas and Citi talking about $9,000 to $9,100 a ton. This is by the end of this year. 92.25 is what JP Morgan believes you will see in the third quarter of this year. Saxo Bank and Bank of America are talking slightly longer term. They believe that 8 to 18 months from now, you will be looking at copper at $10,000, even $12,000 a ton. So near term, slight weakness, but longer term, clearly a very strong case for bullishness.
All right, there's a forecast for copper.